and thank you for attending the first edition of the China Economy Outlook webinar series organized by Singapore Business Federation. In view of COVID-19's significant impact on businesses and industries locally and globally, we are launching this webinar series in order to provide regular updates on the latest work and production recovery situation in China, and to help Singapore companies, especially SMEs, to explore the new and underlying business opportunities arising from COVID-19. We hope you benefit from this webinar series brought by us. Before we start today's session, I would like to remind you that if you have any questions that you would like to raise, you may do so by using the Q&A function of this Zoom meeting at any time during the webinar. Our moderator and panelists may choose to reply to you during the Q&A session or answer you separately. For those unanswered questions, we'll work with the speakers and respond to you individually after the event. As such, it is important for you to indicate your name and company name in the Zoom platform so that we can get back to you later. We would also like to invite you to take part in the poll, which is already live now, to help us understand your general business operations and the upcoming business plans in China under COVID-19. We will close the poll at 3:45 and share the results before we end the webinar. Without further ado, I would like to introduce today's moderator to you. Today's panel discussion will be moderated by Ms. Rachel Ng, Managing Director of Ng & Co LLC. Ms. Ng is a corporate lawyer focusing on corporate advisory, corporate M&A, corporate governance, funds and trust and listing work. She is very active in assisting cross-border investments of clients in Singapore and China. Now, please allow me to pass the mic to Ms. Ng for today's panel discussion on Beyond COVID-19, Mitigating the Impact and Preparing for New Business Opportunities. Ms. Ng, please. Thank you.
Thank you, Flora. Thank you for your kind introduction. And thank you to SBF for inviting me as a moderator. And good afternoon to our several hundred webinar SBF friends and supporters. I hope you're all keeping well and safe during these times. In today's webinar on the China Economic Outlook, it's a great pleasure that we have three esteemed guests with us to share their insights. I'm going to briefly introduce them according to the alphabetical order of their first names, Alex, Bert, and Eugene. First, Alex Capri. Alex has more than 20 years of experience in global value chains, logistics, and international trade, both as an academic and as a professional consultant. And with an impressive track record of having advised clients on cross-border projects of more than 40 countries. He is now a senior fellow and lecturer in NUS Business School and also lectures at the NUS Lee Kuan Yew School of Public Policy. Then we have Bert Hofman. Bert has extensive experience advising governments around the region on a wide range of development issues. Bert is currently director of the East Asian Institute at NUS and professor of practice at the Lee Kuan Yew School, having spent 27 years working with the World Bank. While Bert is Dutch, most of his career has been focused in Asia, namely China, as well as Indonesia, Korea, Philippines, and Mongolia. If I were a student, I would love to hear both Alex and Bert speak. And then with Eugene Wong. Eugene is the Vice Chairman of SBF's China North Asia Business Group. He's also Chairman of CrimsonLogic Private Limited and Getz Group Global Private Limited. Eugene sits on a few SGX-listed companies, Jason Marine Group, Alliance Healthcare, Apex Realty. And personally, I have known Eugene from the time he founded his VC firm, Cyrus Venture Capital, and groomed a number of successful startups and SMEs. And Eugene is my personal idol when it comes to investing in startups. So before we start, a reminder to please participate in the poll, which will close just before 3:45, so I'll try to keep time. And we will have a short Q&A with an aim to let you go back to your other work by around 4-ish, okay, 4 to 4:15. Now today I will be asking my panelists to share their views on China's economic outlook. This topic, as you all agree, could be a subject of debate among us for 3 days, 3 nights even. But we are going to attempt to highlight some key observations and comments over the 40 minutes or so that we have. So without further ado, I'm going to just jump right in. Now, Given that this webinar is hot on the heels of China's annual meeting of the NPC last week, I'd like to direct first my question to Bert. Bert, you are a close observer of China's geopolitics. Have the annual meetings given us any clues on China's current business recovery situation? And also, please let us know what your views are in terms of China's economic outlook, maybe second half of the year, which you are very concerned about, next year, or perhaps in the next 3 to 5 years. But over to you.
Thanks. Well, the very big news, at least for economists, is that there was no target for China's growth announced at the NPC meetings. For the past 25 years, since '94, they announced a target. This year, they did not. Of course, very understandable. First, the first quarter was really bad, minus 6.8% over last year's first quarter. But second, the situation is still so uncertain that it's very hard to actually set a target. Implicitly, if you look at the numbers in detail, especially the budget numbers, the government assumes something like 1.8% growth. Now, that's far less than last year, which was 6%, and far less, frankly, than they would need for reaching their targets of their moderately prosperous society. This would require, for the rest of the year, about 6% growth each quarter. So it's still quite ambitious. But the interesting thing at the meetings is that really the emphasis has shifted to, if you want, more social goals. Employment, keeping urban unemployment below 6% is one of the goals. And creating new jobs, 9 million, a very ambitious target. Last year it was 11 million. With 6% growth, so 9 million with something around 2% growth is a very ambitious target. Protecting some of the poor, the poverty target still holds. It's a very important target. Xi Jinping has made it one of his 3 decisive battles, as he calls it, the other being financial stability and pollution control. So eradicating absolute poverty remains a goal, and government will continue to be focused on that. So those are sort of the highlights. There's a few other things that we can discuss later, but those are the things that really struck me. Rachel, you're mute.
Apologies. With that, with these preliminary comments, what do you personally think in terms of China's outlook in the coming months or the next 1-2 years?
So we think a growth of 2 to 3% is possible, largely driven by domestic demand. And there is a bit of a stimulus in the numbers. China has increased their budget deficits from 5.5% last year to 10.5% this year. So that's a 5 percentage point stimulus in the budget numbers, but this won't be a great year. Afterwards, you can expect a bit of a rebound, in part because you have a low base effect. So next year, if nothing disastrous happens, growth can be in the order of 6 to 7%. So if you want back on track, there are a few clouds on the horizon, though, and one of the things that really came to the fore during the meetings, not at the meeting, but during the meetings, is the tensions with the US. And that has been very costly to China, been very costly in terms of trade. It lost a lot of exports to the United States. And if this continues, and if you want, there's more and more restrictions put on Chinese enterprises in producing, especially in the high tech sphere, that will be difficult for China to maintain its high growth. Mm. So normally you'd say a good rebound next year, of course, depending also a little bit on the world economy. But China is now far less export dependent than it was, say, 10 years ago. Right now, it's still significant, but export to GDP is about 18% in terms of value added. So in terms of GDP contribution, it's about 14%. That's not trivial, but it's no longer the 35 to 40% that it was before the global financial crisis. So medium term, still quite okay. The government has its plans. They have big plans for what they call new infrastructure, basically the backbone of a lot of the high-tech industries it wants to support in the coming years. To give one nugget, they plan to put 600,000 base stations for 5G by the end of the year, basically covering the whole country with 5G by the end of the year, which of course is a tremendous boost, not just for building these base stations, but also for the tech industry, for the digital industry that can innovate on the basis of that infrastructure. So in a way, China is trying to do the right thing in response to the crisis, accelerating some of the plans that were planned for the 14th five-year plan, which starts next year. They have basically pre-scheduled it to start now with those investments.
Okay, that's a very helpful thoughts, and to kick off our discussion. Next, I'll come to Alex. Alex, I know you have contributed many commentaries in this area, and please feel free to add your views on what Bert has commented on the outlook for China's economy. But please also, I know you're expert in global value chains and international trade. So I would also like you to comment on how this shift in the supply chain may impact on China's economy following COVID-19. Alex.
Thank you, Rachel. Thank you, Professor Hofman. So I'm going to pick up on where Professor Hofman left off, and I'm going to say that 2020 will be the definitive year between China and the United States in terms of a decoupling process that will begin in the strategic industries sector. It's already begun in the high-tech sector, which will lead to an accelerated reshoring of a lot of the manufacturing process and even the ecosystems around critical technologies such as semiconductors. I think increasingly, if you look at the Made in China 2025 plan, and you look at the 10 key sectors in that plan, from autonomous vehicles, drones, navigation, AI, robotics, we are already seeing now the beginning and the acceleration because of COVID-19 that has really exposed a lot of the asymmetries and the incongruities between the two systems, between China's state-centric, socialism with Chinese characteristics, and the Western system. So the meetings of the Chinese Communist Party have really brought out the emphasis that Beijing is going to be putting on trying to dominate in the industries of the future. So you have, for example, I mentioned the Made in China 2025 funding initiative, but now there's the China Standards 2035, which pushes for Chinese technical standards in everything from 5G to other products, which are also, in a historical context, very important, because when we look at the technology field, we have inherent value differences, and I mean ideological value differences, around things like privacy, surveillance, censorship, and there's an entire, billion-dollar, multi-billion-dollar industry built around those types of technologies. So we will see decoupling and export controls in those areas as well. Again, May has been a very, very important month, I think, to encapsulate all this. You had the United States changing under its export control regime, the so-called foreign direct rule, which now basically says you cannot use any kind of US technology in the manufacturing of semiconductors. So that immediately impacts Huawei, because Huawei's subsidiary, HiSilicon, which has designed new chips, the Kirin, for its smartphones and for its 5G base stations and other 5G infrastructure, absolutely needs these chips, and only TSMC and a couple other non-Chinese manufacturers, all of which use American technology exclusively to make this stuff, means that potentially the United States has a chokehold on Huawei's access and China's access in general to semiconductors, to leading edge semiconductors, because China is way, way behind in that area. So this means that with the supply chain restructuring, with the reshoring, there are going to be a lot of opportunities in places like Singapore as, for example, high tech, the ecosystems that are built around semiconductors and these other industries like drones, AI, and other things that are going to come under increasing scrutiny, those supply chains will relocate. Some will come to Singapore. And Singapore, of course, has, for a post-pandemic digital world, does have a fairly good structure and a good setup to accommodate that sort of thing. So I think Singapore will actually benefit from a capacity building standpoint around these geopolitical events that are occurring between the United States and China and throughout Southeast Asia. So I think the other areas, when you look at logistics, when you look at education, when you look at tech startups around security, cybersecurity, if you look at what Singapore is doing in building its own 5G and rolling out its own 5G infrastructure with diverse suppliers, with a lot of local involvement, this is going to build a very interesting ecosystem that then has a lot of capacity building expertise that it will rent out essentially in other parts of Southeast Asia. Same thing with the logistics industry and so forth and so on. So, so I do think that the geopolitical elements that are absolutely accentuated and accelerated because of COVID-19 will create new opportunities, new problem-solving opportunities, not only as we migrate to this digital post-pandemic economy, but also because of these geopolitical issues that I've mentioned. So yeah, I'll stop there.
I think, with the COVID, everyone, including multinationals, are very conscious about how their supply chain was disrupted. And there's a lot of talk about how each of them will localize their supply chain more and more after COVID. And I'm glad to hear from you that, based on all these strategy that China is developing or focusing on, that Singapore still has a part to play amidst this shift. And do you see, with COVID, do you see any, following COVID, do you see any impact between Singapore and China in terms of our trading ties?
Well, China is Singapore's #1 trading partner, and it's going to continue to be, its #1 trading partner. I think, especially when you look at, everyday consumer goods. Certainly, there's a huge flow of tourism. The service sector is thriving from Singapore-China exchange. I think that will continue. At the same time, by far the #1 investing country in Singapore is the United States, including in the manufacturing and the tech sector. So Singapore actually has is in a unique position to essentially avoid that binary choice situation as best that it can, and continue to exploit its trading relationship with China, as well as continue to exploit its connectivity to the rest of the world and the knowledge economy. And it's doing that, it's done that quite well, and I think it will continue to do that through its very impressive network of free trade agreements, which are increasingly focused on services, which are values-based, meaning there's rules, frameworks in place to ensure that good governance around things like privacy, data privacy, and so on, sustainability, and so on, are sort of baked into these relationships, which in turn create more opportunities for Singapore businesses. So when we look at the post-COVID-19 emphasis that we're going to see on climate change, for example, on supply chain transparency, on food security and food tech, for example, on renewable energy, all of these things have been brought to light as sort of crises in waiting, if you will, if not addressed, if not proactively addressed. And because COVID shows what happens when you don't adequately prepare for a health crisis, et cetera. So again, I see all of these as really positive developments for Singapore, because it's so uniquely positioned as it is, as a global trading hub, and with the critical mass that it has here in specific industries and sectors. I think it's very well positioned.
Thanks, Alex. I like your phrase that Singapore should work as best as we can, really, because we're often sandwiched between US and China. And with the comment that this is a definitive year for decoupling. You know, we've talked about decoupling for many years, but if in your view this is a definitive year, then, you know, we really should orientate our strategy properly. And now turning on to Eugene. Eugene, based on your experience, I'm sure you witnessed Singapore corporates suffering, you know, from business interruptions, operational challenges, workforce challenges during COVID-19, and possibly are still suffering. Are there any lessons which you feel our businesses should remember from this particular episode?
Yeah, thanks, Rachel, for asking that question, and also SBF for inviting me. I think I want to I agree with my two panelists about the opportunities that Singapore has for our companies. That it's not all gloom and doom. I think the one interesting thing is China. Since today's webinar is about economic outlook of China, I think one has to take heart that how resilient China is. I mean, we witnessed how China built a hospital almost instantaneously, and how they were able to swiftly get their economy back to slow reopening. And I think the theme that Singapore companies should learn is that we have to get our business back to get going, you know, get back to life, and rethink of how we do business. So I'm chairman of GETS, and actually we have been talking to our partners in China over virtual meetings, and surprisingly we were able to close a few deals just being digital. You would have thought that doing business in China, you have to meet personally, you have to have guanxi, you know, you need to have a physical meetings. But I think the economy and the way Chinese businesses are coping have been very digital in mindset. And the second thing I want to encourage my fellow members of SBF is that the trade between China and ASEAN will continue to grow. I was reading from China Daily just the other day that according to customs data, the trade between China and ASEAN has grown 5.7% between January and April year on year to 1.35 trillion, whereas the trade that China has with EU and US have fell 6.5% and 12.8%. So with how things are going between China and US, I believe that we have an opportunity to increase trading between China and ASEAN. And Singapore being an excellent logistic hub and a supply chain hub, and also our brand of having trustworthy quality products, I think we should capture that opportunity. So with that, we do have a supply chain. Give you an example. We have a company called, invested in a company called Commodities Intelligence Center. And you would have thought that, you know, you are just talking about export of stuff, normal essential goods to China. But during the Wuhan shutdown, CIC managed to, within 48 hours, send and source products, medical products, masks and PPE from ASEAN to be exported to Wuhan within 48 hours. And they supplied 3.3 million masks. And since then, they have done 11 shipments two-way. And on the other flow, CIC has arranged masks from China to Singapore during this period. So I think the capturing and the trend of trade between ASEAN and China will grow. The third thing that will be interesting going forward is foreign direct investment. I think China is already one of the largest foreign direct investment in ASEAN. I think going forward, you see the likes of Alibaba doing redevelopment of properties in Singapore. I would envisage a stronger flow of foreign direct investments from China into Singapore. So the thing I would encourage our members to do is entering into partnership with the Chinese companies, you know, going into joint venture, exploring business opportunities together, for the ASEAN market and from there globally. So that's something I'd like to share. Yeah.
Thanks, Eugene. I think it's about 20, 25 years ago that we had this mantra to all go and invest in China, but it's interesting to see now that China is going to invest outwards and hopefully through Singapore into ASEAN. Now, if we have this need to capture Chinese investments coming out, I'd like to turn to Bert, Prof. Hofman. How do you think the China right now might view Singapore and Singapore businesses going forward? You know, Eugene mentioned when Wuhan was in trouble, you know, in ASEAN countries, we quickly gather the masks and ship it to them, and vice versa. They too have extended and, you know, reciprocated the help. So I personally feel that as a country, we've been really respectful in our comments towards China all throughout this COVID period, and we try to be helpful and respectful. Do you think China's attitude will remain the same towards Singapore and our Singapore businesses, or should we expect any change in attitude?
Well, I think you said it right. I think there's a lot of respect, there's a lot of mutual respect, there's a lot of mutual understanding, at least because of the shared ethnic and to some extent cultural background of parts of the population, and the very important ties that Singapore has at this particular point in time. There is a however, and that is this relationship may be under considerable pressure. And the current U.S. administration, in a way, they're fighting their trade war or their tech war in the wrong way. They don't mobilize. They don't mobilize very well their partners and their allies around the world. Maybe a next administration may call on Singapore to really choose sides. And then I appreciate Alex's strategy, if you want to get on board on producing in that space where there's more sensitive in the more sensitive areas that might move out of China, but you may not be able to produce for the Chinese market even if you're outside China. And that's going to be quite difficult. The other area that is at least in the short term a bit of a damper is that China will focus on domestic growth. China will focus on not so much in foreign overseas investment. Singapore has been an important hub for bringing investment overseas. That might at least be temporarily a bit on a bit of a lower gas. And the third is, of course, tourism. Very important for Singapore. Frankly, I don't see tourism recover, not this year, but it will also spill over into next year. There will be much more restrictions. And it's the one thing that you can't do digital tourism, unfortunately. But that's something that will continue to be a drag on growth in Singapore. Opposite, and I do think, I know there's a lot of companies, a lot of the members, your members are focused on domestic production, but investments in China also has significant opportunities. And there's a whole range of strengths of Singapore that will be in higher demand in China going forward. And the tech is one, we discussed tech industry, but healthcare industry. The third would be education. Mind you, education will be difficult. There's a lot of overseas Chinese students in Singapore and in Australia. It will be quite hard to continue the levels that we saw in the past, but there will be a growth business domestically. And NUS and NTU, they have fantastic brands. Working with Chinese partners in mainland China to deliver products would be a very good alternative as well. This whole new infrastructure move, which is in part tech, but it is others as well. I see a very strong position of Singapore, in part in production and in inputs, but in part also because of Singapore's very strong rule of law, its basis for hosting intellectual property and to some extent research in those areas. So that's another area where I think Singapore can benefit from what's happening in China.
But there's a question about would Singapore have to worry about China weaponizing their economy to incentivize and coerce who and how we do business with? Do you have any view on this?
I think China will learn over time that is actually not a way. I'm Dutch, as you said in the introduction.
Yes.
And the Dutch got a swipe as well, because they upgraded their office in Thailand, or they changed the name of the office in Taiwan from trade office to simply office. And immediately there was a reaction from the United States. We see now changes with Australia. I don't see it as a lasting strategy for China. China will see that is not a way to make friends. It's not a way to make partners, and it will cost them dearly over time, especially when there would be a different administration in the United States.
Thank you for that. I want to turn to Eugene now. Eugene, on the back of all these discussions, I'm glad as a Singaporean that there's still a lot of opportunities out there. Would you like to comment on what could be the potential business opportunities for Singapore companies emerging in China?
Okay, I think the China economy has changed over the last 20 years. I first went to China in 1999, and you can see the whole economy changing from a manufacturing, agricultural economy to manufacturing to state-owned enterprises.
Yes.
But now China has become a very digital economy. PM has mentioned many times that they are cashless economy, and also they have. I have friends in China, and during this whole COVID, they are so used to ordering food through delivery platforms, and there's nothing strange for them. Groceries are all done online, so I would say technology is one sector that Singapore companies can seek as opportunities to provide and work in China. Now I'm talking about Singapore companies going to China. What are sectors that I see opportunities? Technology. Two is transportation. The transport industry in logistics and transport industry in China is still not as efficient as Singapore. I think we can, with the government project, Chongqing project, Singapore government is working out the whole supply chain logistics flow from Chongqing all the way to Peipuan, Nanning to Singapore, right, to the rest of ASEAN. Logistics. The third area, which happens, I think, just overnight, although Raffles Medical has already entered into China, I think medical. I think the medical area is another area, especially the services side, the standard of healthcare. I think I as a Singaporean am proud of all our healthcare workers, and I think the way we treat our patients is world class, and I think that part can be exported or teamed up with Chinese companies. The third and fourth area, and I'll stop at the third area, which I think Alex alluded to, which I'm very fond of personally, is food tech. I think food technology, Singapore is ranked #1. Not many people know we are the ranked #1 in food security in the world, and therefore we could provide and team up with Chinese company to develop better, more sustainable food. The last one, which I think we may end up being the Asian financial center in this time zone, to be a financing hub for China, renminbi as well as other financing. And we particularly in Calista, in GETS, we are moving into e-financing for your shipments, right? So you can get financing through Singapore when you want to ship goods into China, or you want to export goods from China to Singapore. So those are the few areas I think are bright spots post-COVID.
Okay, thanks, Eugene. I'm going to turn to Alex. And Alex, I know you've spoken a lot on this area. Besides the areas that yourself and Eugene have identified, could you perhaps share then for Singapore companies, what can we focus on in terms of building capacity, in terms of ideas, innovation, new channels, new supply chain capability? Where should they focus, or where should we focus the resources on?
Good question. Let me just step back for a second and just point out that the Financial Times has an annual listing of Asia Pacific's fastest growing companies. It's 500 companies. They've come out with the most recent listing of the 500 fastest growing companies in Asia Pacific. More than 70 are from Singapore. Now that is incredibly impressive, right? If you look at that. So Singapore is punching way above its weight when it comes to leading edge companies. And Eugene mentioned a lot of these companies already. So these companies are in prime position to go into China. Now, what I would say is, in some cases, because of the way the world is going in terms of the localization and the fragmentation of international value chains, Singaporean companies have to think about an in China, for China strategy, and perhaps a slightly different strategy for how they're operating in Singapore or elsewhere in the world. In other words, it's not going to be a seamless sort of cross-border exchange of information and goods because of data localization laws and differences in privacy laws and so forth and so on. So an in China, for China strategy is going to be key, right? It's not a one size fits all for Singaporean companies venturing out. Now, Rachel, to answer your more specific question about supply chains, actually, one of my favorite companies is CrimsonLogic because of the work that they've done. And I'm a former customs officer, and I, believe it or not, got involved in the global trade platform, or the national trade platform, and now the networked trade platform that that the Singapore government has in place, which is this absolutely world-class platform that shippers, importers, exporters, warehouse operators, everybody gets on this platform, when we look at cross-border imports, exports, etc. So that's an area where Singapore, and this is a capacity building opportunity, where Singapore companies can work with other countries and other companies that are either restructuring their supply chains or looking to have better traceability, better transparency, to either qualify for free trade agreements or to trace for carbon footprints or human rights violations or whatever it happens to be. That's a technology play, right? That's a perfect opportunity for a lot of Singaporean companies that are in the logistics business to begin with. So I really think that that will be an area where we'll see a lot of activity.
Interesting. I like it that all of you have mentioned tech. So, and given that China is really very advanced in terms of how they've done their technology infrastructure, I'm glad that we still have something to offer to China. Eugene, there's a question here on from the audience. You've suggested partnering with Chinese companies to explore China market or markets outside China. And how do you think that the question is, how do you think US would respond to that if we go partner other people?
First of all, I must thank Alex for your strong word, encouraging word on CrimsonLogic. We didn't rehearse this, yeah. But you're absolutely right that Singapore can play a value-add platform on the digital connectivity trade platform part. But on the question that Rachel highlighted, I think in technology, even in CrimsonLogic, our market has always been developing countries. So we have exported technology to Middle East, in Oman, Saudi Arabia, in Africa, Kenya, Rwanda, in Panama, Chile, and most recently to Fiji. So I would say that as a Singapore firm, we sometimes cannot choose our markets. We have to go where the market will take our products. But I like the phrase that Alex mentioned. Even for China, you have to develop a in China strategy. We have grown up going to last 15, 20 years, going to China, trying to sell them something that you think Singapore has built better, right? But I think now our mindset has to change. We should go down there because we are more globalized in mindset and we are more plugged in. We have to go there, partner with the Chinese companies and develop something, whether it's a product or service or platform for the Chinese market, and build a new, what I would call digital trust, a new way of building business relationship with the new generation of private companies. I think the trust or the wave of growth in China in the next 20 years will be private enterprises rather than state-owned enterprises. So go and team up with them and build products and services platforms for China.
Thanks, Eugene. There's a question here, I think picking up, there's a point about financing hub, and I don't wonder whether Alex, you will want to have a go at this question, which is, given the tension in Hong Kong, do you think China will consider Singapore as an alternative platform for this pitch to be a financial hub?
That's an excellent question. There is so much more at play, though, when we look at the overall sort of geopolitical landscape involving China. So as we know, China's the CCP is really clamping down on on media, on society in many ways. And, Xi Jinping is really asserting himself. So the blowback to that, of course, is the Hong Kong situation and what China ends up doing in Hong Kong. Now, I think if China sort of commits itself too strongly, or, is perceived to be really trying to deprive Hong Kong of its special rule of law, et cetera, then I think there'll be considerable blowback that will be very bad for China, in that, you could see countries that otherwise, in the European Union, for example, that otherwise have tried to keep their noses out of this fray between China and the US, they may, draw a line in the sand and say, look, you've gone too far, and now there's going to be consequences. So I'm certainly watching that situation very closely. The other thing is that I think the caveat here for Singapore in trying not to choose one side or the other is that in partnering with Chinese companies, there is the risk that there could be export controls levied against companies that are doing business with Chinese tech firms, for example. So you could see not just the United States putting export controls on companies that are dealing with Hikvision, for example, SenseTime, Huawei, and so on. These are all companies that have been put on restricted entity lists because of involvement in their technology in Xinjiang province in Western China, in the the monitoring and the surveillance of the Muslim minority population out there. So that's sort of the caveat, not so much for smaller businesses, unless they're super high-tech businesses. So the caveat there is if they're partnering with Chinese companies, they could themselves become subject to different kinds of export controls. And we're seeing that having a ripple effect. And a lot of the collateral damage in those situations are actually American companies or European companies that are doing business with Chinese companies. So that is just going to accelerate this sort of decoupling effect. So I think that's the one caveat. So from a financial standpoint, there will be governance standards. There will be standards that will be tied to value systems. And I think if Beijing goes too far in the authoritarian direction, there will be ramifications.
Yep. Thanks, Alex. I'm going to throw one quick question at Prof. Hofman before we take a look at the poll results. It's a quick comment. It's not an easy one, which is, given this trade tension between US and China beyond COVID-19, how do you see the positive and negative impact there will be to Singapore business? And it's a very big question, so maybe just some quick words and your thoughts.
So look, we don't know how the cookie crumbles yet. So we don't know whether it's going to be a net positive or a net negative. And I think Alex and Eugene have given a couple of avenues through which this can be a net positive. I really like Alex's remarks on value-based approach. So if that becomes, if you want a broader international consensus, then China would have to, if you want, abide by that, and everybody can live with a China that works that way. And then if you want, so some of the tensions could work out positively for Singapore. But if Singapore can't, and other countries can't really fit and are under too much pressure, it can be quite disruptive. And you have to be the recommendation is be agile to see where the opportunities lie. But don't just think the short term, because the longer term implications may be quite damaging. So yes, there might be an opportunity, but if tomorrow the United States moves and makes half your market impossible because you did a move in China, that is an additional risk to look at now.
Yeah, thank you. With that, we'll turn to the poll results. Flora, shall we put up the poll results? Okay, so, all right. I guess everyone's seeing the same results on screen. This is the attendees' background, okay. Oops. Oh, we scroll down. Okay, sorry. All right. Okay, so a good spread of attendees today across a different organization, different size, and actually with 51% coming from companies with more than 100 employees. Okay, very interesting. Okay, let's look at question 3. How have your business operations in China been affected by COVID? Significant sales decreased 31%, moderate sales decreased 32%, not affected 10%. Moderate sales increased 2%, significant sales increased 1%, no operations. So 24% who are listening into this webinar, 24% do not have operations in China for the moment. So yeah, that's great. And then you can have some takeaway from this webinar on what to invest in. Okay, question 4. Has COVID-19 pandemic affected your China business operations in any of the following way? And major impact, temporary shutdown, supply chain reduced, employees absence. Okay, interesting. What would be the estimated cumulative impact of the COVID-19 pandemic on China business operations? Not affected, 7%, 30% loss of revenue. Okay, so almost 50-50. Okay, perhaps I'll turn the panelists' attention to question 6. Have you adopted or will you adopt any of the following strategies for your China business operations to cope with the crisis? Multiple choice. Telecommuting, accelerate automation and new ways of working, evaluate, adopt new tools. Any thoughts that come to mind, Alex, looking at the poll results, the strategies for China business?
Well, look, there's obviously it reflects that there's no doubt that even after the pandemic has come and gone, there will be lasting effects regarding telecommuting and the amount of activity that is done outside of the physical office.
Yep.
Yeah. Maybe I'd like to add, it's interesting, one of the respondents mentioned, a lot of respondents mentioned e-commerce, right? That will change after COVID. I think, for most of us who have gone to China to do business, it is actually quite a tiring process, and you need to fly from one city to another city. You need to have dinners and lunch and all that. I think what is good in this COVID is that it's changing the mindset that I said earlier. It's changing the mindset of the Chinese business people, which already started a little bit by President Xi Jinping a few years back, but now even more, where businesses are going e-commerce, they are going telecommuting. And it's changing the way Singapore business. It should change the way Singapore business do things. So one example I'd like to highlight is, CapitaLand is a big mall operator in Singapore and China. I'm actually very pleased to read that they have turned into, they're going to create a platform that will deliver food versus Deliveroo or, so I would say that if you have a physical business in China, the climate is right now to change how you do business, and actually it's advantageous for small businesses from Singapore.
Interesting.
Yeah,
Okay.
what I just like to add, what I find interesting is the complete change in debate compared to 2 months ago. 2 months ago, we were talking about how to be more resilient by diversifying out of China, because this was risky and look, this epidemic there. And now we see that's actually a global phenomenon, and China looks particularly good. If you were to look at which country has been the most resilient, well, you have New Zealand, sure, and South Korea is good. But if you look at China, they've done really well, and given that their enormous strength in manufacturing, it will continue to be a factor. The new factor is indeed a doubling down on the trade war and the tech war. That's the dominant factor, not the resilience for any future pandemics.
Yeah, indeed. So I'm going to pick up one or two more questions to respond to. Let me see. I think, okay. So I want to ask Eugene one more question, which is this question here that I think in the earlier years when we invested in China, it was through joint ventures. And then after that, it's kind of more wholly foreign enterprise. Question here is, what could be the better way for Singapore companies to be involved in businesses in China? Better to partner Chinese companies or through G2G framework and projects?
I think we are very blessed in Singapore. We have a government that proactively do G2G framework like Tianjin, Chongqing, and Suzhou. I think the Chongqing, I particularly like the Chongqing platform because it's actually a platform that is service related rather than manufacturing related as compared to Suzhou. So I will encourage our Singapore businesses. Every year I attend the China ASEAN Expo in Nanning, and throughout the last 5 years it has grown in size, and I see more and more Singapore companies and also ASEAN companies going to Guangxi, and I think the G2G platform is one thing Singapore companies should leverage on because it's already there. But other than that, from there, I think you branch off from your own network, from the chambers, from SBF network, to partner, to find partners to enter, to do new businesses in China. So I think it's a combination of both.
Sure, thank you. So let me see, we have a few minutes left. I thought I will pass the mic around to each of our panelists to have a quick few sentences on your closing thoughts on China economic outlook for the near medium term. Maybe Alex?
Just very quickly, just stay on what I've been discussing. Supply chains, value chains, business relationships, these things are organic. They evolve, they change, they shift, but they always seek value. They always seek new opportunities. That's going to continue. So with COVID, without COVID, that process will continue. The problem solving will continue, and the new opportunities will open up. So I think China will present its own unique opportunities and continue to do so, and businesses should continue to pursue those. And there will be new challenges that we've discussed, which businesses will learn to negotiate as well.
Thanks, Alex. Bert?
Yeah, well, one quote from Churchill about the United States says, the Americans will always do the right thing after exploring any other opportunity. So I think in the end, I mean, I can't imagine a world where there will be a new Cold War. So I think if that is indeed the world that we live in the future without a Cold War, then China will be by mid-century, a $30,000 per capita economy. It's now a $10,000 per capita economy. So it's a tripling of that economy. Enormous growth still ahead, and enormous opportunities for Singapore, but for many countries around the world. Thanks.
Thank you. Eugene?
Okay, I just want to say that Singapore has always thrived as a trading hub from the days we were founded. And I think this has moved into a digital trading hub. And I hope when, like what government has done with the G2G, plus also what at CrimsonLogic we have developed the Callista platform. So we will be, I think, encourage our SBF members to explore doing and trading digitally rather than the old way. And we can help.
Thank you. So coming into this webinar, I was a bit concerned about, how Singapore is going to stand vis-a-vis China. But my takeaway is, there's going to be continued pressure for Singapore, having to balance the two superpowers, US and America. But this, I hear, could potentially be a year for decoupling. And if that's the case, Alex, I think we'll be even more stressed out in Singapore. I hear that GDP in China will be down from Prof. Hofman. Tourism will be down, which is sad news for Singapore since we're very dependent on tourism. But also very glad to hear all the positivity by our panelists in terms of the approach. I hear that we go values-based, right? We don't cite anyone. We go rule of law and we go values-based. And we should, the path can be mapped out in front of us. I'm glad to hear that from our panelists that Singapore still has a role in various interesting sectors. And from what I hear, we can play in high tech, semiconductor, AI, drones, potentially a financing hub, food tech, logistics, medical. So, well, there's still many sectors for us to explore and consider. And Eugene shared that China into ASEAN investments and trade increased by 5.7%. That's really great. I mean, I sit on the ASEAN Business Advisory Council. We are constantly monitoring the statistics and the trades. And really, if ASEAN can really get together and work more closely, whether in terms of attracting investments, the laws or logistics, it would be great as a one big market. So I hope everyone has taken away some sound bites, some pointers from today's session. Before I end today, please join me in thanking our panelists, Alex Capri, Professor Bert Hofman, and Eugene Wong for their very insightful comments today. May I hand you back to Flora and SBF. Thank you.
Thank you, Rachel. Thank you, Professor Hofman, Professor Capri, and Mr. Wong for the insightful sharing and discussion in the past 1 hour. We really appreciate the time and effort you have spent for this webinar. I would also like to thank all the attendees today for coming up with such a great list of questions. As mentioned at the beginning of the webinar, for those questions that are unanswered, we will work with the speakers and get back to you individually later. Subsequently, in July, we will organize the second edition of the China Economy Outlook webinar. If you are already in our mailing list, you will receive the event details very soon. But if you're not in our mailing list and would like to receive future event invitations and updates on the China and North Asia markets, you may scan the QR code here shown on the screen to join us as the SBF China and North Asia Business Group member. Remember, this is the complimentary service provided by SBF. And lastly, appreciate it if you can spend 1 to 2 minutes filling up a feedback form when you leave the meeting to help us improve our event management and content development for the upcoming webinars. Once again, thank you everyone. Please stay safe, healthy, and see you in our future events soon. Goodbye.